Okay, today is Thursday. It's 7:57 p.m. It's June 5th. Um, I just passed the phase 1 of funding Pips 5K challenge. And and I still have a second. I actually have two 5K challenges. The second one, the second one, which was essentially the first one, was at about 4%, and I suffered a severe drawdown. And then I brought it back as of today up to 4% now. So I'm halfway through. So the first one is a pass. The second one, I'm halfway there now. And I've started the second phase of the one that I passed. So apparently, if I don't trade it, there is a 30-day inactivity or something like that, 20-day inactivity, where the account uh, is taken away. Okay, if I don't trade it, so I just put a small trade on, so that it's so the second uh, the the second phase is alive. So then this is essentially the life of a day trader, and I have been living it for the past 4 to 5 years, and and there were a couple of things that happened, which is essentially um, many years ago, I discovered that a coffee made me edgy. Okay, it made me edgy, and that was not conducive uh, to to do what I am doing as a day trader, right? So I held off drinking coffee for many years, 4 to 5 years now. And then recently, within the last 1 week, I started to start drinking coffee now. Now, I noticed what the difference is. I used to be tired when I was trading, but the coffee brings about the essentially what it does is it seems to burn calories at the time when I'm trading instead of the body being uh, suppressed from using calories. And so what that does is the uh, it brings upon the consciousness more so than without using caffeine or coffee. So today I realized I was going over in my mind, because it's a lot easier to do in my mind instead of doing something physically. I realized that for the past many years, the hardest part was controlling my psychology. Okay, I've noticed that. I've noticed that the hardest part about trading is controlling the psychology, which is essentially becoming conscious of the things that causes the emotions to erupt. Okay, that was the hardest part. It took many years to become conscious of these things that were occurring. And that's why professional traders talk about taking journals, writing down journals of the activities that I go through in the process of on this journey to as in a marathon to become a profitable trader. It is documenting the subtle things that I would experience, but not document, so that it repeats over and over and over again. And therefore, the reason for documenting this journey, so that I can reflect on it. That's the only way to see the subtleties of being a profitable trader. If I don't see it, then it keeps repeating, and I wouldn't know how to pinpoint exactly what's causing it. And therefore, the first part of trading has been the psychology. It has been. But now I have become familiar with the impact of psychology. Okay? The impact of psychology. The impact of psychology um, the impact of psychology has many things that causes. So it emotion the psychology creates a separation between the logical side with the physical body. Simply put, okay, that's what happens. Simply put, psychology separates the logical side from the body, where the body is controlled by the subconscious. And so when I get into an emotional state, or such as, let's say like I've been trading for like 4 to 5 hours, and then I've been doing well, and then all of a sudden I put on a trade which has won, which was made by a mistake, and it's sized too big, and then because I was caught off guard thinking that, oh, hey, look, I'm trading well, it's going well, so I can size up a little bit. Then all of a sudden, what I thought I was doing has two problems. One, my assumption was purely based on gambling, without even thinking about it, because I have habituated myself within that period of time to just trade without thinking about it. Then the size is big, and then the market moves against me, and then once that occurs, then my mind, because it's in a coasting situation, that it is not aware of how to handle that situation, and it careens out of control, and by the time I know it, I made 3 or 4 or 5 different mistakes in the trade, and that causes my account to be severely hampered, or in my case, for the past 4 to 5 years, a severe drawdown in my bank account, in the way of losing challenges, almost 400 challenges, and lots of things like that. So that has been, for example, that's one issue. So there are quite a few things. Recently, I discovered that apparently in the internet, you can, if you do a search on pizzas, if you eat pizzas and you attempted to trade it, pizzas will give you this a psychological, like, a good feeling when you eat it. Apparently, there's some chemicals in there that causes the body to feel like it's in a good state of mind. And what that causes is it causes complacency. Okay, so I didn't know that. Now I'm aware. So what I eat, how I interact with other people, uh, how I drive during the day, when I interact, that spills its way in to my subconscious, and that the subconscious, without being able to separate that emotion, will be introduced into the trading. So that has been the hardest part of trading so far. That has been it's like, if I were to write a book, I would say that now that I have some experience, I can say, yeah, emotion causes severe problems. Emotions causes severe problems in trading. I can say that. But when I don't know it, it's a years and years of journey to discover what that subject matter is, right? So if I were to write a book, I would say that the first 3 parts, the 34% of the chapters would be dedicated to psychology, because that is the first steps, okay? The second, now I'm doing it differently than other people, which is essentially defining what a setup is and then using it, and then slowly, because the success rate re-establishes the person in the right direction. Whereas if I don't have a right setup, emotion detracts from the journey that I'm taking as a trader. So what I found is that psychology has been the hardest thing about day trading. Now that I have some experience on how to navigate around it, I realized the next step, with the success that I had for the past 1 week, is the setup. Now, the hardest part about the setup is essentially understanding, because the hardest part, it's out there, it's in the internet, everybody knows about this. Everybody on the internet knows about this. Okay, way in the past, maybe many years ago, it may have been wink here, wink there, exchanging private conversations between experienced traders and the person who is tied in to the method for proper trading, but now it's everywhere. It's on the internet. And logically, one would conclude, okay? Logically, one would conclude after having many years of experience in trading, the fundamental. Now I'm going to the second part of this journey. There may be more as I start to escalate into higher returns, because the now that I have conquered psychology in trading, the next step is to now pull money out of the market. Okay, so that requires a solid setup. Right? Once that solid setup, now the part about the solid setup where everybody knows now is knowing what support and resistance is. Okay, if I know where the support is, I can just pile on when the price is near there. I can just pile on, knowing that even if it retraces and suffers a drawdown, it's eventually going to go back up, because that's support. That is the definition of support. That's what all traders do. Every traders do that. Whether it's going to be based on whether it's going to be a weekly trade, a monthly trade, or hourly trade, or a minute trade, or second trade, or whatever it is. There is all traders are trading based on support and resistance. Now that's where the hardest part is. Identification where the support is. Specifically looking at the support and resistance. If I look at it, if I look at the resistance, is the flip side of support. So if I were to strictly discuss what that second part of the setup is, essentially is identification of support. That is the next hardest part about trading, defining what a support is. So the many professional traders, they create this idea, and then they do back testing for months and years and decades and throughout the life of the market, in order to confirm that what they're looking is establishing a support. They're doing back testing in order to support their idea, which is to create a support for that setup. Once that setup is done, they can reliably, based on the probability that they've gained from back testing, so they could say, based on historical data, when they see a particular situation, 95% of the time it's going to behave in a predictable manner from point A to point B. That is what back testing does. Okay, so that's the second hardest part about trading. Okay, it can be flopped around between psychology and setup, but eventually those things have to be ironed out. Now I'm, based on the result that I got, I've realized that it's a very easy thing now that I look at it, because it has created an area where it was bouncing off multiple times, not just once. Okay, the hard part is like identifying a support based on zero support. Okay, saying, okay, that's the support. That's the hardest part. But when the first support hits and reacts to that support, it moves away from the support. That is support for that particular time frame. But if I were to extrapolate and attempt to predict based on the left side of the information to define support the idea of that support, then it would take multiple points of contact within that price range, that range where that is established as support. Okay, so the hardest part now for me is identifying where that support is, and that makes it a lot easier, and I can size big too. Knowing that when I place a trade, it can move against me with so much drawdown, but as long as that drawdown fits within the daily loss limit, okay, and preferably as small as possible, and hope for the movement to move in a significant manner where the size is small enough to absorb and be a inconsequential amount of trade for that entry. And when it moves at my benefit moves to a certain point where it provides me a sufficient amount of gain to say that, okay, um, it is perfectly, it is dialed in just right for that right size for that particular trade, having less expenditure with the psychological, uh, apparently there's some, along with capital, there's psychology, uh, there's like a drawdown in the psychology, the emotional, a roller coaster, and when that causes it, it causes the body to be physically exerted, okay, the mind to be exerted, and so as long as I'm staying above that threshold, then the trade becomes less of a hassle, and moves in a direction where it expends less amount of energy, right? So I've concluded within the past 1 week. Now the second hardest part of trading is now looking at look identification of support. Okay, if I can just look at a chart and say, oh hey, uh, for this reason, that's support. Okay, as soon as when I can say that with a very high probability, okay, then I can size big enough, okay, big enough such that my efficacy is higher and the return will be more, and I can size a little bigger to maximize that trade. Okay, so these are the three things that I want when I see that support. And so based on that support, okay, sometimes that support will be, so if I were to look at the magnitude of the gains from that particular setup, it's going to be based on the next resistance. Okay, it's going to be based on the resistance that I see, right? So, and the strength of that support is going to be based on several factors. Okay, the obvious one that I've seen in the past is, okay, it made like 5 or 6 touches, uh, because it's a forex pair. What it does is the forex pair hovers around an imaginary, uh, satisfactory level, price level, where that currency is acceptable between the two nations because it's a pair. For instance, the UJ, which is USD JPY, which is essentially the two nations are exchanging the conversions from the US dollar with the Japanese yen, right? And so based on the economy, it changes, flops up and down. It flops up and down based on the performance of each country. But there is a happy medium all the time, despite the fact that it is changing all the time, at a point where if it becomes outlandishly outside of the acceptable currency exchange rate, then the tendency is for that forex pair to migrate down to an area or even overshoot, and then eventually make its way to the price where it's acceptable within within the tighter range instead of being the wider range, right? I think there's something called like a stochastics or something that has this window that, because it's a visualization of the possibility of it moving around within the upper and the lower range of the price as it moves between that towards the at where that dynamic acceptable exchange rate is. Okay, so when I see that, then I see, based on the past 1 week, it is a support area based on the movement. Currently, there was a tariff thing that the U.S. government imposed. As soon as that tariff was uh, um, denied by the Supreme Court, immediately UJ dropped. Okay, it dropped to the point where there's significant support. It's an artificial support area where it should not be. And so when that happens, and when the tariff is installed, then what it will do is it wants to move back. It wants to move back to to an area where the the effect of tariff uh, the effective tariff has been removed from the exchange rate. And so that the fundamental information creates a support area. And then when I trade off of that, I know that the UJ wants to move back up. And as soon as when I see that with the correlation of seeing on the chart that it is displaying a tendency to be supported at that price, and with the new information, we're knowing that it's going to move up, I can start to insert my risk. That's risk on at that point. When that happens, then the price moves up and the gain is achieved at that moment. Now, so that is a prime example of what setups that I'm looking for, and that happens uh, every moment, every day, every week, all the time. It happens all the time. The information that impacts. So essentially, what I'm now, I just realized this. What I've realized now is that emotional psychology has numerous things that causes this psychology to be distorted during the day. Now, if I were to carry that over to the setups, there are myriads of things that causes the setups to be impacted. Okay, now I just made that conclusion. There are myriad of things that causes the setups to prevail in its way based on its specific characteristics. One of them is the tariff that has an impact on currency. The second part is the news that comes out, or news before and news after. So I'm just getting goosebumps in here. So what's happening now that I'm looking at this? So that's, I mean, this is very, very interesting, the way that things are prevailing. So I can now reason. I can reason out why I can associate the candles that I'm seeing, and I can associate the type of candles that I see prior to FOMC release and post FOMC. So here's a very, very blunt statement about the shape of the candles prior to. What happens prior to the FOMC release is the candles are small. It moves in a very small manner, okay? Which means that the market is leery. It is waiting for the market is quiet because it is waiting for the information to be released after FOMC, and the candles are very small. It's small, but it still moves in a certain way, right? It moves back and forth, and it shows a very sideways type of candle structure. That is a concrete evidence of specific behavior tied to a specific event in macroeconomics. Then afterwards, based on the impact of the news, the candles varies. As soon as the news is released, there could be like 5,000 pips that could flop around, which could be 100 or 150 times bigger than the candles that were painted prior to. And so that, and then based on the information, it's going to go up or it's going to go down. Okay? And so as soon as that information is released, a support is established. It's going to be either resistance or support. And if it's resistance, it's going to drop. Okay, so that's the second part. That's the second part of the impact of macroeconomics impacting trading. Now I've tied something significant to what trading is. It's the candles. Okay. Now I'm like, I am a technical trader. Okay. So that means now I can associate global economic events now all of it, every bit of it, into the shape of the candle. Okay? I can look at a candle and I can say, this is what the world is thinking right now. I can say that. I can say that with absolute certainty. I can now say with absolute certainty whatever's happening everywhere in the whole wide world just by looking at that candle. I have concrete evidence that that candle is a representation of what is happening all over the world with all the news and everything, billions of people interacting. And that candle, I can say it with absolute certainty that the market is visible. It is, I can see what the market is doing at that moment with whatever is happening because I've already substantiated based on back testing in my mind that when FOMC releases information, prior to, it's quiet. The candles are very small. And then once the news is released, the candles generally is based on the potency of the information. It varies quite a bit because it is steering the direction of the country. So when it's paired with the U.S. economy, U.S. is one or two of the global trade country. It is the most powerful country in the whole wide world. Okay? Then FOMC releases something that steers the direction of the greatest economy in the whole world. It will impact all other nations. That is why the candles are small prior to the FOMC release. And that interest rate has a tremendous amount of impact because it has, one of them is tied to the Treasury. And the Treasury can sell these things, bonds, to the world at a certain interest rate. And so if their interest rate is low, then people want to, I guess they want to sell it or something, or they want to buy it because it's got lower interest rate or whatever it is. So the direction of the global money supply flows in and out. So that is an incredible amount, and it controls the exchange rates, the inflations, all that stuff based on that single candle before and afterwards. Okay, so I've already established it. I've established a fundamental connection between the candles that I see, such as like the crash of the 1930s, okay? So I don't even have to look at it. I can tell you for absolute certainty, okay? I can tell you with absolute certainty, prior to the crash, the candles may have been big and may have been fluctuating quite a bit. But afterwards, I can tell you with absolute certainty, it moved significantly more, okay? And it occurred in 1987. It occurred in 2008. It occurred in many, many times in world history. It is a known fact. Okay? So now, as a day trader, the most important part is identification of taking the information. Now, this reminds me of this guy he's a GANs trader. Apparently, he applies the principle of GANs. And he was on Chat with Traders, and I was reviewing this guy like 5 years ago. And apparently now he lives in Thailand, and because he's so good at the charts, he can see what's going on. And so apparently he was at a party, and this guy he just met says he knew that he was a trader, and it pulled up this chart and say, hey, I can't see too many setups. But this guy who's a GANs trader says, what are you talking about? There's all sorts of things you can see on this chart. So it's based on your experience in knowing what to look for. So Dave Chappelle talked about this. He apparently lived in a white America. Okay, that's what he on his comedy sketch he talks about that. And when a guy named Naz, apparently he's a singer, and he grew up in the ghetto. Apparently, ghetto, everybody's like living. I mean, it's harsh life in the ghetto. And Dave Chappelle admitted that he grew up in a middle income uh, a family, and the reason why he made that statement is because he knew the meaning behind poor. Because apparently, when you're living in a community, there are people who are more affluent than his family was, and when he visited his friends, he could see how poor he is. But when you're living in a ghetto, everybody's poor, so they don't know the concept of poor. Like he doesn't know what the concept of living in a ghetto is, right? So that's the difference between a GANs practitioner and somebody who really has no idea how to trade. Like I didn't know how to trade, okay? So somebody could come up with a chart like I'm studying Al Brooks, and I can tell you that Al Brooks is a world renowned. He is a world renowned day trader. I mean, he pulls up the charts and says, "Hey, this is what's going on." Okay. So if I were to stand next to him and say, "Hey, look at this chart. Do you see something?" I would say, "I don't see anything." That's how it works. That's how that's how important. That's how incredible information is. Okay, and so the idea now is to understand the impact, the the things that I can go to a party and stand next to him and say, "Hey, look at this chart," and I can stand next to this person. 95% of the people will look at this chart and say, "I don't know what's going on." Okay, but for those who are 5% of the people, will be able to recognize what's going on purely based on the structure of the candles. Okay, the way that the candles are structured, uh, the 5% of people will be able to make the right decision with the right amount of risk and prevail once that thesis is applied to the market. Whereas 95% of the people will take a stab at it. Sometimes they'll be right and sometimes they'll be incorrect. And those times when it's incorrect, emotion will erupt like a volcano. For those people who have back tested, then they know that when the trade goes against them, that it is well within the umbrella of the psychological control. It is well within the probability of that particular setup. And when it doesn't go in that direction, then there are confluences that are not met post the trade, because it is possible to be blinded even for people who are very good at what they do. Because if you just look at YouTube, they say, hey, some people, they many professionals who make millions of dollars a year, they say, yeah, uh, my efficacy in trades are 40%, but still they're able to make 40, $50 million a year, right? So that's how it works. So now I've come to a point with concrete evidence. The hardest part now in my journey as a trader is identification. It should have been the first, but now it is the identification and categorization of the setups before me so that I can take the right trades. Whereas before I was psychologically clueless, whereas before I was uh, technically clueless, and that's why all the money in my bank account had to be shaken out like shaking a tree, and it just fell off. And that's why I've experienced a severe drawdown for the past 4 to 5 years because of that, because of those two factors. Now, the hard part is associating with the things that I see so that I can have confidence in the trade that I make. So that's why backtesting is so important. For me, I took the hard road, which is forward testing, spending $50,000 in the past 4 to 5 years, right? Spending spending $50,000, right? And 5 years of my life. Okay? Time is incredibly important for me. For young people, they have a lot of time. For me, I don't have much time. Okay? But it took me 5 years. 5 years to get to this point. So now the hardest part. Now the hardest part in trading now for me is the identification of these setups. And I need to categorize them so that I only take the biggest trade. It's like, sure, I can open up a Subway. Okay, I can open up a Subway franchise, right? Or I can open up a McDonald's Subway, a franchise. Okay, so I have a choice. Okay, I have a choice. Okay, or I heard that Five Guys is the more lucrative franchise these days. So I can choose between the so like, see, whenever I go to like Carl's Jr., their parking lots are like not as busy as other people are, but McDonald's is always busy. Okay, so if I were to relate to restaurant business, McDonald's is a high probability, high impactful trade. But a like Subway, even though it is popular worldwide, if I look at it, it's only in a small secluded kind of area, or in a shopping mall somewhere around there where the traffic is less, right? And so if I were to compare between two and say that this is a McDonald's setup, this is a Subway setup, so I need to identify so that when there are two types of setups that are right in front of me, I take the one that is a higher probability setup with a higher impactful return on it, so that I could maximize my time and maximize my financial resources to make it worthwhile. So that is the hard part now. Okay, so I need to identify whether I'm franchising McDonald's or whether I'm franchising Subway. Okay. So the other part is, okay, so eventually the idea for me is to become extremely wealthy. Now, in order for me to be very, very wealthy, I need to identify between. So there are three top. What kind of business are they in? They are in the business of computing. They are in the business of selling computer chips. Okay, so there's three main ones. One of them is AMD, one of them is Intel, one of them is NVIDIA. Right now, the best one is NVIDIA, because it is essentially the dominant force in the global market, and they demand an incredible market capitalization based on sales. And so the future is to identify. It is to identify. Now, if I were to identify between the three with all the rest, all three are winners, but the performance of AMD and NVIDIA is higher than Intel has been. Intel has, even though it has global reach, it has been stagnant in its growth. Okay, and so the return on investment is smaller. Okay, whereas NVIDIA and AMD has been growing for many years. So it is the identification of these. I can label these setups that will come forth, and when I look at a chart, I should be able to now identify, based on the behavior of the size of the candle, the way that it's structured. Couple factors I've heard many times, like there's a structure in the market. Okay, I heard there's a structure. There's a particular structure that's in the market that is defining the behavior of the whole world based on a specific time period. And when I recognize what that specific structure is, then I have an idea how it's going to behave. or if it breaks that structure, it's moving into a different type of situation, then I can see. Okay, so one plainly obvious thing is it in a range or is it in a breakout? Okay, so that's the structure. That's a structural change that I should be able to identify. Okay, so if I look at it, it could be like trending in a wide band, right? It could be moving sideways. That's what I call its indecision. It's moving up and down, but it's indecision. It is floating around a microeconomics. But when it's trending, moving outside of the box, it is essentially being transformed between a microeconomics being infused with macroeconomics that's essentially moving into a different tier of price action. Okay, so it's going to move into another area. So that's the identification of moving from one area to the next, and the big money is going to be made with less effort. Okay, so if I were to logically think about it, when something is trending, all I have to do is get in and wait for it. But if I'm trading within a range, I have to trade in and out, because I don't know when it's going to go back to where I entered, and so the idea is going to be different based on what I'm seeing on a structural basis. So that's the market structure. Is it trending or is it range bound? Okay, so that is the identification of what's going on. And so if I look at, like, there are like a lot of books about technical analysis. So when I look at these technical analysis, for instance, there's something called a double bottom or double top. So for instance, if I look at something called a double bottom, which is associated with a single candle, with a indecision candle, which is a very narrow center candle body with wicks on the upper and the bottom part, which essentially is representing a double bottom or a single bottom. It is representing that, because it is saying the price has moved to a location. Now it's taking a breather because it is momentarily indecisive in the direction that it wants to go. It could go back up or it could move down. So that's the significance of that indecisive candle or double bottom. And there's quite a few, like cup and handle. What does that mean? So when it's cup and handle, the price moves down and then moves back up and then moves down a little bit, but it doesn't go all the way back up. But it's generally accepted as a bullish trend. So that's sort of like a double bottom, where the second bottom is shallower, which is indicating that it is in a bullish setup. It's a bullish setup. If I were to like zoom out, it's a single indecisive candle. Okay, but it is a situation. It is saying, so that makes sense. It's true. It will happen like that. Okay, anytime a locomotive moves down a train track, it has a specific momentum that it moves. And then when it has to come back, it has to take a breather. It cannot stop and move. It's like traffic. Okay, it's like traffic and tire. So everything is related to the physical nature of life, and it is being imposed into these chart information. These candles are specifically identifying the physical laws of life. So when a car moves forward or reverses, it cannot reverse and go the other direction without stopping for a little bit, where the tire screeches and then goes back the other way. And that is exactly how the market is behaving. It is that's how it works. And so it is the identification of that car moving from that support area where it has stopped, where there is a tire tracks are placed there, and then it's moving in the other direction. But it'll move. It has the potential based on the amount of gas that's in the car and the barrier that's in front. Okay, so it'll go, but it can only move to a point where there's a barrier, because the barrier is going to cause the car to stop. So that's how the market behaves. And I've been thinking about this. Apparently there's like there's also a principle called what is it called? apparently there's like a natural law that has a 23 percentile or 48%, 68% um, Fibonacci. It's called a Fibonacci retracement. So apparently, what happens is that there is a natural principle called the Fibonacci curve, where all natural laws behave in that manner, and that is also applied to the market. And when I see that, there's like a okay. So let's say earnings comes out. Okay, let's say there's earnings that comes out, and so what happens is based on the information, what it will do is it'll drop. It'll drop if the news is bad. It'll drop, but somehow it retraces to a certain point, and it is specifically assigned by natural law, which is called the Fibonacci retracement. It'll bounce right back up to 23%. But if it goes above it, then it'll reach to a certain point like 68%. And then once that information is categorized and I see it in the behavior, in the response of that news, it's going to either go up or it's going to go down based on the retracement information because it's the natural law. It's the behavior of the people who are participating in the market and the behavior of the response to the information that has been disclosed. Sometimes what it will do is it'll go down and then it'll jump a little bit and then fresh information comes out, it'll just keep going down, right? That's why you have like that's why people like these mega banks who are trading in Hong Kong and things like that. Sometimes they'll get it wrong. There will be an earthquake in Japan, and somebody will say, "Hey, the impact is not as severe," and so what they'll do is they'll just pile on. And what sometimes it will do in a black swan event, it'll just keep going down. And what that will do is that single rogue trader will cause the bank to just go out of the bank will be in bankruptcy. Essentially, that's what happens. Okay, so all these things are happening at that moment. That's why, as an individual trader like myself, now I have the ability to utilize something called a stop loss. Okay, just in case some things like that happen. And so now I can associate the setup, and just in case that just in case, and it can be influenced by the amount of R&R that I get, right? So if I'm pulling for 10-1, my win to loss ratio is going to be small. I mean, so what's going to happen is that return to risk. Okay, return to risk is going to be percentage is going to be small. Return to risk is high, but my win to loss ratio is going to be low. Okay, because what will happen is most of the time market moves at a range where the return is going to be higher. Okay, return is going to be lower, but the win to loss ratio is going to be higher. Okay, because that's how the market moves within a certain time period. Okay, you only have one 1987 event. You only have one 2008 event. You only have 1929 event. Just once. It only happened once for that specific event. Okay, so where am I going with this? The idea is to have the right ratio to bring out the right win to loss ratio, right R to R to get the right win to loss ratio. So R to R, WR. Okay, that's what I have to do. Now, now that I'm getting a fresher picture of the market, whereas before I was like essentially emotion blinds you from learning all these things. That's why it took so much time. Now that I have a bit of a handle on what emotion is, now I can focus on what is really important, which is now the hardest part is, am I looking at a McDonald's setup? Am I looking at a McDonald's franchise? Or am I looking at a Subway franchise? Okay. Do I want to make $10,000 a day, or do I want to make $50 a day? Okay. So do I want to make Do I want to make do I want to make $100,000 a day, or do I want to make $1,000 a day? Okay, $1,000 is great, but what am I looking for? I'm looking for a consistent $100,000 a day kind of a trade. Okay, so in order for me to have that kind of a in order for me to take that kind of trade, I have to have an A plus setup. Okay, because when I take it, I know that my efficacy is going to compensate me for anything that could possibly happen. Okay, so the idea now is so this it'll be great. I mean, uh, now President Trump has a friend who has like apparently he has like 50 or 60 McDonald's or something like that. That may be low, but I mean, he's got a lot of McDonald's franchises. Rich people have many McDonald's franchises. So, so, so am I going for a Subway franchise or am I going for a McDonald's franchise? Okay. Now, my ex-wife used to work for a when she was a teenager, um, Dairy Queen. Okay, Dairy Queen. And my daughter worked there briefly too. Now, now, the idea is one day, uh, perhaps the idea is to own numerous McDonald's. Okay, okay. That's the idea. So what am I going for? Am I going for a McDonald's franchise, or am I going for a Subway franchise? It probably it McDonald's has stood the test of time. Okay, I did a brief research into. I'm attempting to start another YouTube channel called uh, what is it called? One Bite Chris or something like that. So the idea is to, after I start making lots of money in the market, what I want to do is I want to like buy a burger and see if I can eat it in one bite. Okay, and post it on YouTube. All right. So so I've done some research, a little bit of research on the price of these burgers. So I've done some research on the price of these burgers. And I'll tell you what, McDonald's and Burger King burgers are expensive, okay? They're not cheap. But when I did a research on Red Robin, and when I did what is that? What is it? There's one right over here. Is it Fridays or something? Whatever it is. I forget what the name of that restaurant is, but their burgers like 15 to 16 bucks. Okay, that's like 4 or 5 Whoppers or 4 or 5 Big Macs, right? And so I've been pricing these things, and so when I look at that, I'm thinking to myself, if I had a choice of eating out more often, then I would probably eat out at McDonald's, right? So the obvious and a more reasonable thing to do is choose something that's going to be. That's why you have McDonald's practically in every street corner, right? So the idea, what is the name of that place? I forget what it is. What is that? What is that place? Food near me. Let's see. Applebee's. Applebee's. Yeah, Applebee's right over here. There's Applebee's right there. But when I look at that sandwich, there's like 15 bucks. 15. Wow. Anyway, so the idea then is to open up a McDonald's franchise. Okay? Get it?